Hi, this is Keith from the Property Upgrader. In this video, I'll be talking about property loans, everything that you need to know. Because recently, we have been doing a lot of calculations for our clients, and there are still a lot of people who aren't aware of the differences between TDSR and MSR, normal loan versus extended loan, and how you can, as a buyer, increase your loan. Right, so let's get right into what I have for you. Alright, so topics that I'll be covering in this video, a very quick one, will be number one, TDSR versus MSR. What are these two ratios and how are they different? Then number two, I'll be talking about normal loan versus extended loan. Right, and then the third one is how do you increase your loan for a property purchase? Okay, so there are practically two very commonly used techniques when you get your loan from the banks. So we call them pledging and unpledging, or you may have known them as fixed D or show funds. Alright, so let's get into the first one, TDSR versus MSR. Alright, so TDSR is what we call a total debt servicing ratio, and it is applicable if you are now looking to buy a new private launch, a resale private property, or a resale EC after it has met its 5 years MOP. So practically all the private properties in the current market, right? So if let's say you are looking to buy such a property now, you'll be taking your loan based on TDSR. Right, so computation for this loan that you'll be taking will be based on 55% of your income. Right, so take for example, you and your spouse adding together, your combined income is 10,000 for easy calculation. So when you apply the loan with the bank, right, it will be based on 55% of your 10,000. Right, so I'll just keep it simple, and then I will show you an example later. So using my Excel, and then you will be able to have a better picture of what is the difference between TDSR and MSR. Right, so the next one will be MSR, and what is this ratio used for? It is applicable for new HDB BTO or new EC, or a resale BTO or EC which is still within the 5 years MOP period. Right, so those units that have attained special approval to be sold before they have reached 5 years, it will still be under MSR. And also for resale HDB, it will also be under MSR. Right, so the difference between MSR and TDSR is that the computation for your loan, right, will only be based on 30% of your combined income. Anyway, I will show you an Excel later, so not to worry too much on this. For now, you just have to understand, TDSR is used for private, and then for MSR is usually used for HDB and new ECs. Alright, and the difference is 55% versus 30%. Alright, so now I'll just go on to the next segment, which is normal loan versus extended loan. So a normal loan is a loan that is only up to age 65. This is the very standard loan that usually the bankers will come back to you, right? So based on your age, based on your income that you provide to the banker, they will usually come back to you with this normal loan, which is commonly known in the market that any property purchase you can get up to max LTV, which is loan to value 75%, which means that, example, if today you're buying a 1 million property, right, the max loan that you can get will be 750,000. But of course, this is determined by the amount of loan that you can get based on your age or your income, right? So take for example, if let's say now you're applying a loan and the banker comes back to you telling you that your eligible loan based on your age and your income is only 500,000, right? So, but the thing is, you're looking to buy a 1 million property. So does this mean that you can still get up to 75%, which is 750,000 loan for this purchase? No, the answer is no. Okay, because the eligible amount that you can get based on your age and your income is only 500,000, right? So which means that the loan that you can get for this purchase is only 50%. Right, so of course I will talk about pledging and unpledging later on how you can increase your loan of 500,000 to 750,000. Right, but there is another method which is what we call an extended loan. Right, so what is the difference between normal loan and extended loan is that, remember just now I say for normal loan it is until the age 65. But then for extended loan, the bank will be looking to give you an additional 10 years of loan, right? So what this means is that, take for example, you're age 45 this year. So based on normal loan, right, because it is only up to age 65, so 65 minus 45, this will only gives you a 20 years loan tenure. But if let's say now we were to utilize the extended loan, what this means is that from the standard age 65, the bank is now able to give you 10 years more loan, right? Which also means that initially this 500,000 amount that they give you, just an estimate, they can probably now stretch to 600,000. Alright, so this is just an estimate. Later I will be using my Excel to show you a real example so that you can have a very clear picture of what I'm talking about. Right, so but back to this example, right? So remember just now I say based on normal loan and based on your age and your income, the bank is only able to give you 500k based on a 20 years loan tenure. But by using this extended loan and by increasing 10 years more loan, now the bank is able to give you 600,000. So does it mean that this 1 million property that you are purchasing, now you can get 600,000? Not really. Okay, because for extended loan, the max tenure is now being reduced down to only 55% from the 75% that you can get if you were to go for a normal loan. Alright, so the reason why 55% is because it's up to age 75, which is quite a high age, and the banks probably want to be more prudent, which is why they are only able to give you up to a max of 55% property value if you were to utilize extended loan for your purchase. And then to take note also, the minimum cash down payment required will also be increased from 5% to 10%. Alright, so coming back to this example, right? So take for example, just now we were saying a same 1 million purchase. And based on the normal loan, and based on your age and income, you're only able to get 500,000, which is 50% of the purchase value, right? But by using extended loan, now you're able to get a loan up to 600k, which is 60%. But the thing is, because there is a cap of 55% over here, which means that at the end of the day, you will only be able to get 550,000 loan for this purchase under extended loan. So is it still better off? Definitely, because if you were to utilize normal loan just now, the max loan that you can get is only 500,000. But just by using the extended loan, now you are able to get 50,000 more loan, right? So again, I will show you in Excel later, and then you can totally understand how this can help you in your situation. Right, so I'll just go on to the third segment, which is how do you increase your loan amount. Right, so this is what we call pledging versus unpledging. Okay, so for pledging, what happens is that you will be required to put in a certain amount of money into your bank account, and this amount of money will be with the bank for 4 years. Interest will be given, but it will be illiquid because in these 4 years you will not be able to withdraw this money out, but the amount that you need to put in will be manageable. Right, so before I go on to talk about unpledging, right, let's go back to the previous segment about the normal loan. Right, so if you can recall just now, okay, based on normal loan, this scenario, so forget about extended loan. Right, let's take a look at normal loan. So remember just now I was saying you are looking to buy a 1 million property, and then the max loan that you hope to get is 75%. But based on your age, your income, the bank is only giving you 500,000 worth of loan. Okay, so by pledging and unpledging, right, you will be able to increase this 50% loan that you're eligible for now to increase to 75%. Okay, so how this really works, again I will show you in the Excel later, but this is just to give you the concept, the idea of what pledging and unpledging do. So what those two instruments do is they will be able to help you to increase the loan that you can get to a higher amount. Okay, so I go back to the pledging. So again, how does pledging make your 500k of loan? How do you increase this 500k up to 750,000 loan so you can get your 75% worth of loan, right? So for pledging, you will have to put an amount of money with the bank. All right, so the exact amount I will show you in the example later, but you just have to understand the concept first. Right, so the second one is unpledging, which is showing of funds. Okay, so what these do is that instead of putting your money into a fixed deposit, now you will only need to show the funds to the bank, to show the fund that you have a certain amount of cash sitting in your bank account, so that they will be comfortable to give you this additional 250,000 additional loan on top of this 500 that you can get initially. Okay, so how this works is that usually you have to show the funds twice. All right, so in this video I will not be talking so much about how it works because it gets pretty confusing. But then for unpledging, you just have to remember that no, you do not have to put it in a fixed deposit. Instead, you just need to show the bank that you have this amount of money. So what this means is that this money is also more liquid. But the thing is that the amount is usually quite huge. Okay, so take for example, if let's say pledging, you need to put in 100k worth of fixed deposit to get your loan up. For unpledging, it will be usually 3 times. That means you have to show the bank that you have 300,000. All right, so that they can give you the additional amount of loan that you require. Alright, so up to this point, I have already finished explaining the explanatory parts. Okay, so what I will do in the next segment will be to show you a live example of a real situation, and to also show you the difference between TDSR and MSR, the normal loan and extended loan, how they can help you in your property purchase, and also how this pledging and unpledging really works. Okay, so I'll just switch to the Excel and continue from there. Okay, so now you're looking at this Excel, and I'll be giving you 2 examples so that you can understand what I went through just now. Okay, so take for example, now we are looking to buy a property of 1.5 million, and then based on normal loan, usually people will want to get 75% loan, which is 1.125 million worth of loan. Okay, and then this 55% over here is if let's say you were to go for extended loan, the max loan that you can get based on extended loan will be 825,000. Okay, so this part over here will be based on TDSR. So take for example, today now you are looking to buy a resale condo, and then you and your spouse are both age 45 and each earning 4,000 a month, which means a combined income of 8,000. So based on age 45 for both of you and a combined income of 8,000, how much loan can you get, right? Which is over here. Okay, so the amount of loan that you can get will be 695,000. But the thing is, now you're looking to buy a property worth 1.5 million, and 695,000, how much percentage is it? So it's only actually 46%. Right, so even though the max loan that you can get based on normal loan is 75%, but based on your age and your income, you're only able to get this loan amount, which is only 46%. So remember just now during the PowerPoint, I was saying there are 3 things that we can do now. The first thing is we can consider taking an extended loan, or we can adopt the pledging or unpledging. Right, so I'll just go through each option with you. So take for example, now we are looking to go for extended. So what happened is because from 20-year loan tenure, now we are able to get 30 years loan tenure. Remember just now for normal loan it's only up to age 65, but then for extended loan is up to age 75, which is why you're able to get 10 years more loan. And how does this affect is that from your 695,000 loan, now the bank is happy to give you 868,000 worth of loan up to age 75. Alright, but the thing is, again, if let's say you were to adopt an extended loan, right, the max loan that you can get is only 55%. So the thing is, even though now you have a new loan eligible amount of 868, you are only able to get a max loan of 825, which is 55% for this purchase. Right, so this is the first way that you can always try first, to see how you can get this 46% to at least 55% through an easy method. Because for this method, you do not have to come out with any cash for your fixed D, or you do not have to show any fund. Right, we just have to let the banker know that now, instead of going for a normal loan, we want to adopt an extended loan, and they can do the calculations for us. Right, but if let's say now you tell me, hey Keith, now I actually have some cash on hand which I do not want to put into my property, but I can actually try to use this to increase my 46% loan up to 75%. Alright, so this is the part where pledging or unpledging comes in. Right, so take a look here. So if let's say we are to get a loan of 75%, the max loan that we can get is 1.125 million. As of now, we are eligible for 695,000, which means that we are 429,000 short of this 1.125 million. So in order for us to get this 429,000 additional loan based on pledging, that means the 4 years fixed deposit, if you can put 237,000 funds into the bank as a fixed D for 4 years, the bank will be happy to give you this additional 429,000, and in this way you'll be able to hit your 75% loan. Right, so this is based on pledging. But if let's say you do not want your money to be stuck in a fixed account, you can adopt the unpledging strategy. But the thing is, this amount, like I say, right, is usually higher. So you have to show the bank that you do have an amount of 790,000 sitting in your own bank account, and then you have to show the bank 2 times, right? And they will be happy to give you this additional 429,000 on top of your 695,000 loan to make your loan 75%. Right, so it may get a bit confusing if this is the first time you are watching this video. So I would suggest that you can re-watch this segment probably 2 or 3 times, and after a while you will get used to it. Alright, so now I will just give a second example. Okay, take for example now, same, okay, you and your spouse is age 45, but you are an income earner of 10,000 per month, and your wife remains at 4,000 per month. Right, so take a look at this loan that you can get. Okay, it's 1.217 million. Right, but this second example I'll be going through based on MSR. Right, so even though you can get a 1.217 million loan for your private purchase, does it mean that you will be able to get the same amount if you are looking to buy a new EC now? No, okay, because if you can recall, for TDSR, for private, it's based on 55% of your income. But then when it comes to HDB or new EC, it will be down to 30%, which is the mortgage servicing ratio. So I'll just scroll up a bit. Right, so even though just now I was saying for private you are able to get 1.217 million, this is based on TDSR. But the thing is, when we come to MSR, if let's say today you are looking to buy a new EC based on the combined income of 14,000, and based on both you and your spouse are 45 years old, the loan tenure remains the same, 20 years. But take note that your loan is now only up to 663,000. So based on TDSR, you'll be given 1.217 million, but when it comes to MSR, the bank will only be giving you 663,000, and the reason is because for MSR, it is only based on 30% of your income. So similarly, if let's say now we were to look at a 1.5 million new EC, 663,000 will only get you 44% loan, right? So same thing as what we went through just now. There are three things that we can do to increase the loan. First thing, let's try extended loan first, right? This is the part whereby you do not have to pledge any money or you do not have to show any money. We just have to let the banker know that we want to use the extended loan instead of a normal loan. So what happened is, by increasing the loan tenure for another 10 years from 663, now we are able to get 828. Okay, but again, the same as per what we have went through just now, because under extended loan, the max LTV is only 55%. So even though now we are able to get 828, we are only able to utilize 825, which is the max of 55%. Alright, so this is number one, adopting an extended loan. Second way, again, will be to use pledging or unpledging. Right, so similarly, in order for us to get a 75%, this is the amount that we are short of, 461,000. And how much do we need to pledge in order to get this additional 461,000? The pledging amount will be 466,000. So by putting this 466,000 into a 4 years fixed D account, the bank will be happy to give you an additional loan of 461. But if let's say we were to adopt the show funds strategy, we will have to show the bank that you have an amount of 1.555 million, and they will be happy to give you this 461 additional loan to pull your loan from 44% up to the max of 75% for this 1.5 million purchase. Alright, so like I say, it may get a bit confusing if this is the first time you are hearing this, so you may want to re-watch this Excel segment a few times, and after a while I'm pretty sure you will be able to understand how each of these options can help you to get a higher loan for your property purchase. Right, so now I'll just go back to the PowerPoint and do a quick summary. Okay, so I'll just go through a very quick summary on what we have went through in this video. So first of all, understanding TDSR versus MSR, 55% versus 30% of your combined income. And then secondly is the differences between normal loan and extended loan. Usually this is used when your loan amount based on normal loan doesn't even hit 55%. Alright, so this is the easiest way for us to get a higher loan, up to 55% at least, so that you can get a higher loan. Alright, and then if let's say 55% is not what you're targeting, then you can consider doing pledging and unpledging, which is fixed D or show funds, to get your loan up to 75%. Lastly, if you're currently looking to buy or sell your property, example hitting your 5 years MOP period for your new EC or your new BTO, and you are not too sure what your next right move will be, make an appointment with us and we can go through with you a discussion, right? So usually we will understand the objectives first to make sure that it makes sense of what's going to be happening next, and then we'll also be working out your financials, how much sales proceed you will be getting back, how much loan can you get, and then how much CPF you have, and then we can work out for you the exact cash you need for your purchase. The risk assessment, making sure that you're not overstretching your purchase, and then also planning out your options, especially if you're currently a property owner and you do know after you sell what are your options available. So you can make an appointment with us and we'll be happy to have a discussion with you. Alright, so this comes to the end of this video. If you have found this video beneficial and now you have more knowledge on property mortgages, do support us by liking and subscribing to our channel. I'm Keith from the Property Upgrader, and I'll see you in the next video. Bye!